the best of money matters. Under the radar.
You're listening to Money FM 89.3, and it's now time for Under the Radar with me, Chaah Mine. Now, from undertaking subcontracting works as an operator for limestone mines to becoming a key producer of high-grade iron ore concentrate, we're going to take you through the ins and outs of SGX-listed Malaysian miner Southern Alliance Mining. Now, the story takes us back to 2001 with the incorporation of Southern Alliance Mining's subsidiary, SAM. Now, then the firm was primarily involved in the subcontracting works for limestone mines in the Malaysian states of Pahang and Perak. Now, 7 years later, in 2008, the company obtained the right to become the mining operator of an open mine pit in Johor called the Chaah Mine. Now, the mine pit allows for the exploration, extraction and processing of iron ore that could be used by pipe coating companies in the oil and gas industry to prevent corrosion in subsea pipes. Now, fast forward to today, Southern Alliance Mining not only offers iron ore for pipe coating, it also ventured into iron ore concentrates to diversify business risks, exporting them to markets such as China before selling the rest to local steel mills in Malaysia. Now, it currently has approximately 60,000 tons of iron ore concentrates, not including pipe coating materials, and has produced and sold a total of 6.3 million tons of iron ore products between 2008 and July 2021. Now, the firm also recently reported its earnings for the 6 months ended January. Revenue declined 23.8% on the year to about 70.3 million ringgit amid weaker iron ore prices as well as slowing demand for China's steel industry. But really, how concerned should we be about this? But what is perhaps more exciting about Southern Alliance Mining is how it is positioning for the future. For one thing, the firm had in April 2023 ventured into rare earth mining after inking 2 agreements to purchase stake in iron absorption clay rare earth mines in Malaysia. But what was the rationale behind the move, and how will the move bolster the firm from fluctuations in iron ore prices? Well, lots of questions, and joining me right here in the studio is Lim Wei Hang, Executive Director and Chief Operating Officer of Southern Alliance Mining. Wei Hang, welcome.
Thank you.
Great to have you join us. And Wei Hang, we've briefly talked about Southern Alliance Mining and how it started in 2001. When it was first started, it was mainly involved in the subcontracting works for limestone mines. Today, it is an established iron ore miner. Take us through the firm's history over the years. And today, in 2025, what is the company's value proposition and business model?
All right. Southern Alliance, through our subsidiary, SAM, we began our humble venture into the mining via subcontracting of the limestone quarry. So basically it's from that's where we learned the trick of those mining. Basically, because as a contractor, we just execute the works or planning based on the input from the mining engineers to carry out the execution work, and that's where we have gathered the experience and know-how as to how to carry out the mining. And that actually brings us through to the Chaah Mine in 2008, in which we carry out the open pit mining based on the experience that we have gathered over the years. And our initial years, our market, the main market is on what we call pipe coating product. And during that, Malaysia was one of the world's largest pipe coater in the world.
Okay.
Right? And our market actually mainly for the oil and gas. And our product actually, because of the specific gravity, right? It has a unique specific gravity, a high SG level, which makes our product suitable for oil and gas. And obviously is that by relying on oil and gas alone, it's not a wise move. Then in 2013, we decided to venture into iron ore concentrate, which is to produce iron ore concentrate for the steel making industry. So the lucky part was that because of this venture, we managed to help us to sail through the crisis during 2014 to 2017, in which we can see the oil price has collapsed. And that actually helped us to diversify into where we are right now. And with today's market, a bit, even though we have a bit challenge from the China, all right, with the depressed in the steel price, but anyhow, we can see a bit of pick up from the pipe coating sector, and that is the beauty of the diversification. Now, talking about today's position, as we know that to rely solely on iron ore product, we are unable to create value for our shareholders.
Yeah.
And the reason why Sam chooses to list ourselves is basically we believe that there will be a platform for us to create value for our shareholders. And that opportunity came in 2022 when we firstly signed up for the explorations for the gold mine, and subsequently in 2023 for the rare earth mining.
Okay, now zooming in on your product verticals right now, Wei Hang, because Southern Alliance Mining now explores mines and also process iron ore, and that iron ore can be made into one, the crushed iron ore used for coating for subsea pipes to prevent corrosion, as we talked about earlier, and two, the iron ore concentrate that can be made into steel and furnitures, ships and buildings. You are also now looking into rare earths. So if we look at your product verticals, right, which is the most important one to the firm, given how you started out selling that crushed iron ore to pipe coating firms?
All right. Actually, both of them are equally important.
Okay.
It just depends on at which point in time, which one is more important than the other one.
Is pipe coating still your bread and butter in terms of your revenue and sales contribution?
Now it's become our main cost,
Okay.
right? But just this main cost doesn't come so often, right? So we are very much relying, at this point in time, we are very much relying on the iron ore concentrate, which will sell for the steel making. But however, we can see nowadays there's a pickup in the query for the pipe coating product because, as you know, this meant for the oil and gas, right? And for oil and gas, it takes time to plan. So planning, it might take a couple of years before they decided to proceed with their investment. So for this pipe coating product, it takes time and it's not always there. But for the iron ore concentrate, it will be there all the time. Just that the price that matters, it will fluctuate accordingly. So because of that, we believe that diversifications into gold and rare earth are important. Right, because it will help us on managing the risk.
You know, the contributions from gold and rare earths might not have come in yet, but if we look at revenue or earnings contribution, right, is there a ballpark figure, ballpark split between crushed iron ore and iron ore concentrate, or is there a targeted figure that you hope to achieve, a targeted proportion?
Well, as what I shared with you earlier, is that for the pipe coating product, it's pretty much like a project base. Right, so now we can see that the demand is coming, right? It's coming back, and when that coming, then it will change the entire ratio. But as of now, we are about say 90% for the iron ore concentrate and remaining for pipe coating. But with the upcoming potential sales, then it will change that ratio.
So it has turned around from being your bread and butter, and in the past, you're being your main course. Okay, but you talk about that diversification into iron ore concentrate in 2013. That has proved to be life-saving because the oil and gas industry took a downturn in late 2014. How severe was the situation back then, and how has that changed the firm's perspective towards diversification?
Oh, it was very bad, right? I would say is basically during that downturn, there's no sales for this pipe coating product. And lucky part was because with the visions that our founder is having, so he decided to venture into iron ore concentrate in 2013, and that proved to be a life-saving to us because during then, coincidentally, that we witnessed a lot of investment from China, right? There are two firms. There is one called Eastern Alliance. So they actually make out a lot of demands from Malaysia.
Okay. So speaking of customers, right, Wei Hang, who are your customers under the various verticals, say, or Chinese iron ore importers to make steel, or Malaysian steel mills or pipe coating companies? Again, which is the most important consumer group when it comes down to dollars and cents on your balance sheet?
Right. When it comes to the sustainability part, we have local steel mill. Basically, in Malaysia now, we have three main producers, mainly Anju. Another one is Alliance Steel, and the last one is Eastern Steel. These three are the main steel mill in Malaysia, and basically Malaysia is a net importer of this iron ore concentrate. So all of them, we actually maintain that relationship. And for the pipe coating, again, it depends on the project. So nowadays, we pretty much export our crushed iron ore to either Indonesia or Vietnam or even Middle East.
So not just Chinese steel import?
No, it's not. Yeah.
Okay. Now, Zooming in on your global footprint, right, Wei Hang, I understand Southern Mining Alliance, it is listed right here on the Singapore Exchange. Most of your operations are localized to Malaysia, though. Your customers in China, Middle East, and etc., as you mentioned. So take us through the various geographical markets you're in. What is the role of the different markets? Which is the most important market for you when it comes down to strategic value or earnings contribution?
All right. So when it comes to the contribution part by region, basically Malaysia is still the most important market to us because we are selling our iron ore concentrates to the local steel mill.
Yeah.
Right. But however, when it comes to the pipe coating, no doubt that in the past we used to sell to Malaysian pipe coater, but their product is meant for overseas project, such as in the Middle East or even in Australia. So now with the change in the dynamic after the 2014 crisis, then we have witnessed that many of them actually shifted overseas. Right. So when it comes to the pipe coating, our main market contributor actually come from Vietnam and Indonesia.
You are saying that during the 2013 crisis, a lot of the pipe coating companies moved away from Malaysia to Vietnam and etc.
So basically, they downsize, and I think most of them actually moved to Middle East.
Ah, okay.
Right? Moved to Middle East. So Vietnam, it has its own industry. So that is our present market.
Any particular reason why in the Middle East, though? It has to do with the proximity of the industry?
Yes, that's one of the reasons.
Okay. Now let's take a look at where things are at for Southern Alliance Mining right now, Wei Hang. The firm recently reported its earnings for the 6 months ended January. If we look at revenue, it declined 23.8% on the year to about 70.3 million Malaysian ringgit amid weaker iron ore prices and slowing demand for China's steel industry. How concerned are you about the numbers given China's economic growth prospects?
Definitely, Chinese economy actually pose a lot of challenge to everyone, right? And definitely for us, we are also concerned with that because from the feedback that we've gotten, it looks like the government's policy or the measures that taken by the Chinese government will take time to see in the effect. So as a miner, we will have to control what we can control, right? Meaning we can't control the price, then we have to control our cost.
Okay.
Right? So that is our main priority right now is to make sure that we can operate efficiently and to bring down our cost as much as possible. Because when it comes to the market price, there's nothing much that we can do, but rather we will have to look at into diversification. That is why diversification for us is very important.
Two parts to this question, right? Given China's economic growth prospects, were the numbers expected? Your performance, was it expected? That's one. And number two, you talk about controlling costs. How far can you control costs? What are the measures taken to control costs?
All right. Talking about control costs, definitely is that because we have transitions from the open pit minings to underground.
Yeah.
So that actually changed the entire costing dynamic.
Yeah.
And with that, through the experience that we have gained so far, we getting more and more efficient in the plannings of the underground mining because given that when you are exposed to the actual environment in the ore body itself, you are able to see whether or not the ore body is that big or that not that big. So from there, we are able to see with our actual results from that mining, and therefore we are able to plan how to carry out the mining more efficiently. And at the same time also we are looking into the possibility of turn to have our own renewable energy to bring down the power cost further. So those are actually within the study right now.
So still at the study stage. Is there a ballpark figure as to how much you can reduce your costs by, or are you still looking at fine-tuning at this point?
We are still looking at fine-tuning because given that mining is something very dynamic and you are dealing with something already that is given, right? So, and on the geological part, it always change. Nothing is fixed, so we will have to build out the data, is a big data, and from there we only able to see which models will suit us better.
Okay. Now let's talk about the wider business environment, Wei Hang. U.S. President Donald Trump's tariffs that continues to be on the minds of investors. market participants and even companies as well. Now, his tariffs on US steel and aluminium imports took effect earlier in March. A quick question here. Are most of your products that sold to China and Malaysian steel mills meant for their domestic consumptions, or are they then exported abroad? And if so, how far would the tariffs dampen demand for your iron ore products?
Okay, the good part about this iron ore mining in Malaysia as well as the Malaysia steel industry is that we are not that big. Right, so mainly our products are meant for local consumptions, and some of them actually being exported to other ASEAN countries. So when it comes to this tariff by President Trump, I think it don't really affect us that much because it's more to the like major steel producer country like China, Canada. So in Malaysia, we are blessed not being big.
Okay, so they're still quite remote, so to speak, right? Still quite far away. Now, if you're just tuning in, we're now in conversation with Lim Wei Hang, Executive Director and Chief Operating Officer of Southern Alliance Mining. Well, let's take a look at the road ahead, Wei Hang. I understand Southern Alliance Mining is embarking on infrastructure expansion in India and Southeast Asia. Tell us more about the expansion moves. How far do you expect it to drive up additional demand? What is the basis for the expansion, and how can that offset weakness in Chinese consumption?
Let me just correct that question a bit, right?
Sure.
So our expansion program in this aspect is we are expanding and exploring for the market, right, in the India, because of late we witness there are quite a number of inquiries from the India importers with regards to the our iron ore products. So that actually is to us is a good news because instead of all relying on China market and the emergence of Indian market is a good news, and it provides us with the alternative to the market, right? But as of now, it's like because Malaysia is still a net importer of iron ore, and there is a cost advantage for us to sell locally rather than export because we can save a lot of sea freight, things like that. So local market is still our main market, but we don't rule out potential expansions to overseas market.
So you're looking at overseas markets in terms of demand, not in terms of the supply and the mines you can tap, not capacity.
No, we are still very much focused on Malaysia because I think is that Malaysia has quite a good mineral resource. Because while Malaysia is not big, but we have a lot of those valuable mineral, for example, gold and rare earth. Right, so these are our main focus because I think is let us focus on high value products rather than mass volume, which require a lot of lands and
a lot of investments.
And basically, Malaysia is a small country, right? The demand for bigger land will result in competitions with other segment.
So what do you think is the overall outlook for your pipe coating and iron ore concentrate business? Is there a ballpark growth rate or target that we are looking at in the mid to longer term? And what are the trends to support this growth?
Yep. Basically, let's talk about pipe coating first, right? Of late, we have witnessed a lot of demands or requests for the quotation for pipe coating products. So I believe that in the coming months or even year, we can see a prospect of turning this inquiry into a supply. And with that, I believe that it definitely is going to, in the shorter term, even despite the drop in the iron ore concentrate price, I believe this, if materialized, is going to compensate for the lower iron ore concentrate price. Now, coming back to iron ore concentrate, basically the demand is always there. The key challenge will be the price because iron ore is a worldwide commodity, right? So it's not really a function of local supply and demand because the price is very much an international benchmark price. So it depends on primarily the Chinese market, right? So demand will always be there.
So how do you forecast your growth rate for the business then? Are you pegging it to, let's say, China's economic growth rate? Can you even do that kind of pegging or forecasting?
It's going to be very challenging because first thing first is that considering our mine in relative to other mine in Australia, for example, we are relatively very small, right? So basically is we are not that affected by the Chinese overall demand. It's just that the Chinese demand will drive or influence the iron ore price. So that is something that is going to be very difficult for us to forecast where are we going to be, because we are very much relying on the selling price. And looking at the present scenario, 2025 could be a challenging year because we yet to see any concrete or very encouraging stimulus package from the Chinese government, despite they have announced something, but the impact is not that great yet.
Yeah.
And also, like what you mentioned earlier about President Trump, he'll be there for 4 years. So I believe that the 4 years will be full of uncertainty. So it is going to be very challenging.
You know, we were just saying that it's very hard to put a number as to where the firm is going because your prices fluctuate depending on the global market. The whole business is also dependent on economic growth elsewhere. Would you say that you're in a very volatile business? How do you, as much as you try to diversify, how do you mitigate your risk and control your costs? There must be a limit to how much you can do.
Yep. Okay. Unfortunately, commodity markets behave in such a manner.
Yeah.
All right. Even we're talking about gold price is volatile, but it's on the upward trend. So that is why we are focusing on gold. And rare earth, the volatility is much, much more than iron ore. But you see, it has a niche market because the demand for rare earth is there. And when the world talk about climate change, green energy, and the demand for rare earth is still remains strong, right?
Yeah.
So of course, just that our challenge right now is how are we going to predict or forecast where is our growth. The other way to do that is definitely to improve your production and to increase your volume. And naturally, with the economy of scales, then you should be able to manage your costs. Right, and we have to be very mindful with the entire supply chains because, like for example, during the 2022 Ukrainian war, it actually affect the supply of this explosive because Russia and Ukraine, they control about 40% of worldwide productions of this ammonia. So that actually affect everyone very badly. So I think nowadays we are not looking at just the cost of purchase per se, but we will have to foresee potential disruptions to that supply chain.
I see lots to think about. Now, you've mentioned gold a number of times and rare earth a number of times as well. Let's get straight into that because what is perhaps also very exciting about Southern Alliance Mining, as we've shared in the introduction, is how it is positioning for the future. Now, for one thing, in April 2023, Southern Alliance Mining ventured into rare earth mining after inking 2 agreements to purchase stake in iron absorption clay rare earth mines in Malaysia. A little bit of a mouthful here, but I understand these rare earth elements can be used in a wide variety of applications like your technology devices, semiconductors, radar systems, electric vehicles, even wind turbines. So, all in, take us through your rationale behind inking that 2 agreements and at what stage is Southern Alliance Mining in at the proposed acquisitions?
Right. So that is something very exciting us, right? So basically, rare earth can be found in 2 major forms, right? One will be like it's a mineral base, like what Linus is doing. So it's the open pit mining. It's massive kind of mining. And another one is associated with the clay. Like what we mentioned here is iron absorption clay. So for this type of mining, it doesn't involve massive linkering, but instead it involves a mining technique called in situ leaching method. Right? When you're talking about in situ leaching method, basically is talking about soluble mining. We just use the liquid. So let chemical reactions will take place. So that actually will help us to like maintain the ecosystem, right, without much disruptions to that.
Okay.
So that part actually help us to manage the land use very diligently because as you know, Malaysia is a small country. So when you're talking about land competitions, then mining will always be the last, right? So with that, then it actually fits well into like our sustainability because one of the reasons why we are also interested in this in situ rare earth mining is because it doesn't involve massive land clearing. And when we don't involve massive land clearings, then we can say is that, okay, when it comes to the sustainability part, the ESG compliance part, then we can score better points.
Let's rate it for you.
Yes, because nowadays, even for Chinese company, they also try to look for the ESG compliance product. So worldwide, we're looking at the ESG compliance product. So that actually help us to market ourselves and to position SAM as a responsible miner, and also we also care about the impacts towards the forest ecosystem.
Don't mind us being the money-loving ones at Money FM. We look at the additional costs, additional investments, additional regulatory clearance that you need to put in on the exploration front to look into rare earths, to look into gold. And you mentioned that on the prices side, sometimes rare earths can fluctuate even more than the iron ore prices. Then what is the one or two things that make you think that, okay, this is a move that is justified for Southern Alliance Mining?
All right. That is a very good question. So let's look at from the company's perspective, right? When we're talking about this ionic clay rare earth, we are referring to a brownfield, right? Means to say that the company has actually carried out the exploration, has established their resources, and in fact has carried out the mining with the proven mining methods and proven market. So they actually take away a lot of risk, because for mining, the biggest risk is exploration risk.
Yeah.
Right? It doesn't mean that every single dollar that you invest in exploration, it will result in the discovery of all. But with that, I think that actually brings us through to that. And the second part is that no doubt that the price of rare earth fluctuates a lot and is very volatile. But with the in situ leaching mining methods, right, which doesn't involve massive land clearings, that actually bring that cost down, and it's more manageable. It's more manageable to manage the fluctuations in the rare earth price. And more importantly also is that this project is a collaboration between a Malaysian company with a China Rare Earth Group. So that actually provide a lot of, I would say, weight to the whole equation, because as you know, rare earth mining and refining in China is controlled by state-owned enterprise, and that is the state-owned enterprise that enter into that arrangement with MCI Resources, and by tapping into that, we are able to have the access to Chinese market.
Would partnerships still be your preferred method to gain access to the rare earth mining sector?
Oh yeah, we will have to begin our baby step in this rare earth sector by partnering with the established company. Even though, a lot have been said about the Chinese dominant in this rare earth sector, but whether we like it or not, that is the reality, right? Because China control 90% of refining capacity. Right, there are only 10% by liners and others. So yes, you still need to have a close cooperation with everyone.
Okay, I know this question is a bit tough because it's a bit like a crystal ball. We can't really project with fluctuating prices, as you mentioned. But all in Wei Hang, market.us valued the global rare earths metals market at about $14.1 billion USD in 2023. That figure is expected to grow at a CAGR of 10.4% between 2024 and 2033. APAC region will command over half of the market share. So, how far are you aligned with the numbers then, and how much will global rare earth mining contribute to overall sales for Southern Alliance Mining in the mid to longer term?
Yes, I wish to have that crystal ball with me, but unfortunately it doesn't work that way. But okay, let us go on to a typical academician's way of looking at that.
Correct.
Okay, we go on assumptions of if everything stays today as it is today, right? So, yes, the demands for the rare earth is there. Like you mentioned, it is a compounding effect is huge. And so the value is even talking about 10 over billion, but the value chain created from there, according to Department of Energy of US, is more than $1 trillion, right? So it's huge. So looking at that is that if we were to apply today's scenario into this segment, the contribution from the rare earth going to be very significant to our turnover.
But as for the magic number, that remains a magic number in the crystal ball.
Oh, yes. Exactly, because the price that you will be talking today and the price tomorrow...
By the time you explore and you have the gold and the rare earth on your hand.
Yes.
Okay, and before we let you go, Wei Hang, keep us excited. What are some future plans for Southern Alliance Mining for the rest of this year and perhaps into the next? Any teasers for us?
Yeah, okay. So basically, we don't only believe in the acquisitions of companies, but we also need to make sure that it consolidated well within our framework, our governance framework, our compliance framework, and also our ESG compliance part. So acquisitions of this rare company or even the gold basically help us to build out our so-called mineral resource, right? And we have to make sure that we deliver, so we cannot over-jealously and aggressively acquiring companies, but we have to make sure that whatever companies that we have acquired produce the results to help us to enhance our value and earning.
So being a bit more selective in the new year as well.
Oh, yes, exactly.
Okay, lots to watch indeed. And thanks so much for the insights, Wei Hang. That was Lim Wei Hang, Executive Director and Chief Operating Officer of Southern Alliance Mining. Thank you so much for joining us.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.